And give a round of applause for Peter and Alyse.
Hello. Hello.
Hello.
The final session. So, Alyse, when we spoke before, you told me you have a deep conviction for Bitcoin. Where does that come from?
That's right. So when I mentioned to you that I had a deep conviction for Bitcoin, I actually did some reflection myself on where that comes from. And I think one of the advantages that I had, both in understanding the tech and in being convicted towards it, was the way I came to learn more about Bitcoin and the Bitcoin blockchain. And beyond reading the white paper, when I found Bitcoin, what I did was I went deep into the communications of Satoshi and the folks that were around him or her or them on the cypherpunks mailing list, and so kind of had a broader context for the white paper and for the Bitcoin technology, and through that had a way to understand or anticipate the changes that would happen as Bitcoin matured.
Okay. So, obviously, in the early days of Bitcoin, there wasn't a huge amount of interest from venture and a huge amount of funding, but I guess over the last few years, as Bitcoin has grown so rapidly and the network's become worth billions, how have you seen a different approach and a different appreciation for Bitcoin from the venture community?
Sure. So I began in the space in about 2013. I was coming from a background of venture investing in deep tech infrastructure and enterprise tech. And so the blockchain felt rather familiar to me as an infrastructure. And in 2013, 2014, there weren't many VCs looking at Bitcoin, or at least not feeling that they understood it well enough to make a bet in the space. And that has changed a bit, really, in that people don't feel anymore that they need to understand it to make a bet. And so it would be good to see the shift also happen in terms of venture understanding of the tech. But what's missing a bit, I think, is that investors, traditional venture investors, are approaching the technology as though it's just a new tech and not necessarily understanding that there is a paradigm shift that requires founders to do things a bit differently than they would if they were building on a cloud infrastructure or if they were building data center software, for instance.
And certainly there's a significant density of venture capital that exists in Silicon Valley, and amongst those there are those who are interested in Bitcoin, but there are also those that are very interested in blockchain as a term.
Sure.
And have made significant returns investing in alternative projects. What do you see as the key difference between, say, Bitcoin and the large volume of other altcoin projects?
Sure. Well, so we could spend several hours talking about that, right? Okay, well, so I think that so the parameters that I look at when I'm looking at a blockchain technology, or the way I measure Bitcoin's progress and maturation, is level of stability. So by that, I mean uptime and how available is infrastructure to users and to businesses. And you know that for Bitcoin, we're at well past 99% uptime. Bitcoin blockchain has been down maybe for about 14 hours since it launched. And then the second parameter is that I look at the security of the protocol itself. And we know that Bitcoin has never been hacked. That's certain at the protocol level, and that certainly differentiates it from other blockchains. And then finally, how dependable it is as an infrastructure. And the reason why that's important to VCs is because businesses build on top of infrastructure on a certain set of assumptions or promises that that infrastructure has made. And so if there's going to be a profound change in what's offered in the infrastructure, that affects people's businesses. But Bitcoin, of course, is really quite dependable. We know what to expect from it. It's made hard promises to us, and it keeps them. And when there's going to be an upgrade, or when there's even work being done on an upgrade, we know that well in advance, and it's socialized in the community before it moves forward. And so I think when I outline those three parameters, you can see how distinguished Bitcoin is from the set of, now maybe a couple thousand blockchain protocols.
What did you make of the ICO craze of 2017?
Sure. So that was, it caught me off guard a little bit. So I started looking at token sales from new protocols in 2014. So I think I was one of the first VCs to do diligence in the space. We looked at the second and third, companies putting forward token sales in order to fundraise for their projects. And two things. One, it's disappointing to me that some of the best practices that could have been defined as early as 2014 haven't been carried forward into the activity we saw in 2016, 17, and later. Frankly, the token sales that happened early were much more responsible and well-defined than what we saw in 2017. And then secondly, most of these opportunities just simply don't present a standard venture capital investment opportunity. And the sorts of ways that you have to work with a token that you purchase as a VC require you to do things that go outside of the practice of venture capital. And so there wasn't really an opportunity. I generally haven't seen anything I would have been interested in, but even beyond that, there wasn't really an opportunity to participate in a way that's ethical and then responsible to my investors.
Yeah, so one of the things that stood out to me from 2017 is that there were a number of funds who were able to generate value and create returns on projects very early in the life cycle, way before any project market fit had been achieved. And that almost felt immoral that these things were being sold to a retail market before a product was proven in the market. And how do you feel about that?
Absolutely. And I think it even got worse than that. But specifically on on the proposition you just made, the way venture capital generally works, especially at the early stages, is that you back founders and a company, and you're presuming to do this in the very long term. So you're backing a team today that you believe will present a viable technology and a viable business over 7-8 years or even longer than that. And by the time you exit your position, you're selling your shares to other knowledgeable investors in a secondary market at a growth stage, or to the public market where there's been quite sophisticated vetting. And so what was disappointing to see was that very experienced and almost blue chip venture capitalists that know all of these things still felt so much, perhaps fear of missing out of the quicker liquidity, that they were making money by selling tokens to a less sophisticated investor than themselves, and without having any partnership with the founders over the long term, 7 or 8 years, to see the companies mature. But something that I think we also saw in the 2017 hype that is even worse than that is investors that were pushing founders to do token sales in order for investors to get exposure to that quicker liquidity.
And I guess also a lot of the founders are missing part of what has been developed over many years of venture capital by raising money through an ICO rather than going through all the various pitch meetings and trying to sell their deck to people. By being able to do an ICO, they were missing out on a number of things that experienced VCs would bring to a table for them.
That's absolutely right. So that was my top concern for founders that were doing ICOs, and some of the so I have less of an aversion to ICOs because I do think that it advantaged founders that otherwise wouldn't have had access to capital. So while it's likely a non-ideal route broadly for everyone in fundraising, you can see exceptions to that where it's a founder that doesn't fit a standard of Silicon Valley and so is not going to be able to raise without some sort of crowdfunding mechanism. But even for those founders, for those founders and for others, the concern that I had is that ICO money doesn't come with the same sort of mentorship, partnership, and frankly, participation in risk that venture investing generally does. And that's that should be even more significant than the capital that's contributed in venture capital.
And also, you tend to miss out on the phases of investment, going from seed round to a Series A, and essentially missing the bootstrapping and the hunger and the
accountability to hitting benchmarks.
Yeah. And I guess also with when you're working with a VC from day one, you have experienced people who've run multiple companies or have been involved in multiple companies, sat on the board and helping you shape the company.
That's right. And that's something that I hope that founders understand when they consider taking venture capital, which is that one of the advantages to working with a VC is that we're seeing many VCs are seeing hundreds of opportunities to invest a year and have worked with dozens and dozens of companies, and there's certain lessons that emerge that are not transparent to founders that don't have the same quantity of experience. And so hopefully the idea is to pass those lessons on so that we don't have to all learn through our own mistakes, but can learn from mistakes of others.
Okay, so let's talk about Bitcoin.
Great.
What do you think the advantages are of entrepreneurs focusing on Bitcoin now?
Well, so the simple advantages are what I earlier outlined, which is that it's a technology that you can count on, and you can anticipate changes as they come, and ready your company to be able to take advantage of what's offered by protocol upgrades and maturation of the ecosystem, and that differentiates Bitcoin. The other, maybe less obvious advantage is that I believe as venture capital matures in this field, that VCs will actually be more keen to invest in a Bitcoin-focused company than in something built on another protocol, because they themselves understand the stability of the infrastructure and how that makes it unique. And so, perhaps in the next few years, we start to see more of an allocation to Bitcoin founders than to blockchain founders or founders building on other protocols.
And how do you feel about entrepreneurs in the space having the kind of difficult choice of focusing entirely on Bitcoin, or sometimes having to consider altcoins as part of what they do? So, for example, if they were a wallet developer, they might just want to have a Bitcoin-only wallet, but at the same time, they might have pressure from users to say, well, I want to store my Ethereum on there as well, which is a problem exchanges have in many businesses. Do you feel that they should be brave enough just to focus entirely on Bitcoin, or do you think it's prudent to also consider alternative blockchains?
So I think there's been a little bit of a shift there in that the prudent approach of taking, of hedging your bets and spending time across protocols, that was maybe more necessary a few years ago, before Bitcoin has become much more stable, and we've seen adoption levels reach a point that I think this is going to work out, versus it being a question of whether it will work out, or at least it's more likely. And so to create a hedge probably is less necessary. But to go back to the first part of your question, I think that founders feel pressure to serve their user base, whether that be consumers or enterprise. And so when you're thinking about potentially addressing another cryptocurrency ecosystem or adopting another protocol, there's a trade-off, right? In that you may be serving user demand, and do you also think that users can have safe and responsible exposure to that protocol or cryptocurrency? And so founders are needing to balance between the two.
Okay, so there might be people in here or people who will listen to this talk later on who are entrepreneurs. They're looking at Bitcoin, they're thinking they might want to raise venture capital. You obviously got a fair amount of experience as an investor. What is it that people possibly don't understand about venture capital, and what are the kind of myths around raising money through venture capital?
Well, so the first thing is and this is for a subgroup of founders, but there was a lot of confusion about how venture capital was different from ICOs in terms of valuation and amount of capital raised. And so certainly if you're a typically strong founder, you could probably raise more money from the ICO space than you would from venture, but the trade-off is that in raising money responsibly, so at a sensible valuation and an amount that's modest enough to cover the next 18 to 24 months of your operations, but maybe not the next 20 years of your operations, then you start to create a healthy financialization of your company that allows you to not just raise money once, but to raise money multiple times as your company matures. So one thing we're actually starting to see now in the ICO space, or folks that raised ICOs, is that they're needing to raise a second round of financing. But because the fundraising mechanism of an ICO creates such a messy financial structure and legal obligations, it's quite hard to raise the subsequent financing, especially from traditional investors. The same sort of difficulty can happen if a founder raises venture capital money at a valuation they can't justify, or raises too much money. So what you want to do is work with investors that are looking at the core metrics of your company and are understanding both how you expect to advance those metrics and the business itself, and are financing you according to those metrics and with an understanding of what you'll need to achieve in your next round to raise what we call an up round, so to raise at a higher valuation.
And are there any mistakes that founders typically make when they're looking to raise money from somebody like yourself?
Wow, that's a good question. So I'll speak specifically to the types of founders that I work with most closely. And so both in my Bitcoin work and in the investments I did prior to coming into the Bitcoin space, I've tended to work with very technical founders. So I often work with CEOs that have an engineering background, or folks that are working on deeper tech. And the mistakes that we make with that background is to almost undersell our work or over intellectualize it. And so I see founders come in to speak with venture capitalists and present a lot of data points rather than presenting a conclusion or a vision of the company's aim. And so communication style is quite important, and it's something that is almost a bit of a science and can be refined over time. So that's one mistake. The next mistake, I think, and maybe even more important, is to do diligence and selection of the investors you work with yourself, rather than taking, the easiest money or the money attached to the highest valuation. And the reason why that's important is because when you accept an investment from somebody, you're partnered with them for years. It could be 10 to 12 years that these folks are essentially your colleagues in a way. And so you want to make sure you're working with people where there's alignment of morals and alignment of expectations and of commitment to the company.
You tend to find in traditional tech that when people are looking to raise funds, there's usually a team in place, 2 or 3 people. You'll usually have, let's say, a CTO, and possibly like a CEO type person is a bit more salesy. Do you tend to find in Bitcoin that we're maybe missing the salesy type person? It's a lot of techies who are leading these projects, and that's maybe what makes it harder for someone like you to invest in the projects? Or are you able to see past that?
Well, so my secret advantage is that I can work with a technical founder and understand and adjust for the way that person presents, so that I understand where the sales pitch is buried in the technical talk. So the adjustment I think that founders would make would not be in talking to someone like me, but with speaking with someone that might have less of an affinity, frankly, for technical founders. But what has changed in the ecosystem, actually, maybe in the past 18 months, is that there's a more sophisticated presence of business minds. And also, and I know this is a pet issue for you, there's been a ramp up of the design and UI UX talent in the space. And to see both of those changes happening at the same time, I think alludes to really interesting tools and services entering the ecosystem that will likely expand the market.
Okay, so if there's somebody out here now, they're working on a project and they're thinking, okay, I want to raise venture funding, what's the advice you would give them straight away? What are the things they should be doing in order, firstly, to get on your radar, but secondly, if they come to see you, how should they be presenting themselves? And also, just to add to that, do you believe that people should be bootstrapping before they raise money, or are you happy to see people just on an idea?
Normally, you have to bootstrap before you raise money, so it's a requirement rather than something that is good to do. It's something that probably most people have to do. So what I like to see in founders that I work with is that in the Bitcoin space is that there's an understanding of where the technology is today and that the business is built for the state of the current Bitcoin blockchain infrastructure. And what that means is that the business model doesn't make assumptions about what can be done on top of the blockchain that just simply aren't true. A historical example of where there was a breakdown in this was the very early investment in 2014-15 in payment processors, where there was an assumption that the core protocol would be able to create a certain scale that fit with the business model of these payment processors, although that just simply wasn't true and shouldn't have been expected if we really understood what Satoshi and the early group of cypherpunks were ideating on when Bitcoin was first introduced. And so in talking to founders today, it's important to understand that they have a business model that makes sense with where the current state of tech is, and that they're flexible enough to integrate and take advantage of upgrades that are coming down the road. And then finally, what I ideally like to see is that founders of companies are able to be in good communication with core developers, or at least in respectful observation of what's happening at a core level, so that there can be an anticipation around where the protocol is going and how that affects their business.
So if somebody did come to you and they put a pitch together you're happy with and you think of taking out an investment, you don't just offer money, you also offer some form of mentorship as well, right?
Sure. So and also, by the way, I also go to founders. So it's not, so people come to us and I also reach out. And in both occasions, it's very typical that I work with founders for a period of time or know them before investing. And so, for instance, the next investment that we're going to make will be in a founder that we've been collaborating together probably for maybe the past 18 months. And this is pretty important, I think, on both sides. So both it helps for me to understand the founder and the business better, but also for the founder to know what they're getting into when they select a partnership. And there's many founders that have just, such a breadth of really attractive choices and how to take capital. And it's always a privilege when someone chooses you. And I think the longer you have a period of getting to know someone, the more well suited the match can be.
I'm guessing, though, the entrepreneurial journey within Bitcoin is certainly going to be very different from traditional tech. We've seen it over the last 18 months. We've had quite a tough bear market in Bitcoin. I expect that's one thing, but how does it compare to the traditional markets that you've operated in?
Well, founders have to be so much, thicker skinned and more robust and agile. So, I mean, it's really, both of my grandfathers were entrepreneurs, and so I have a deep respect for entrepreneurs just generally. But within the Bitcoin and cryptocurrency space, I have an even higher regard, just because of the resiliency that's required of founders going through both market cycles and the process of building on a still developing infrastructure is. It's just incredible.
And what about yourself? How are the demands different for you investing in Bitcoin as compared to traditional tech?
Wow, that's a great question. Okay, well, so I think, of course, I have to spend more time understanding an infrastructure that, the venture investing part of what I do is only indirectly benefited by, right? So we need to understand an infrastructure that will always exist outside the control of the companies we invest in. The development work, of course, is also something that we have no control over, and it's also outside of the control of the companies we invest in. And so we have to deeply know it. We have to understand the development team that's working on it and the way that priorities are being set, and then also the trade-offs and choices that are being made at the protocol level and in development. And so that's a bit different, although I quite enjoy that. And so, perhaps that's the reason why I end up here. also the way that we get access to companies and discover companies is a bit different. We often see the best opportunities to invest actually coming in from developers that are working very close to protocol level, and this would be a bit different than conventional startup ecosystem where it's VCs sending opportunities to invest back and forth. Here, I think the best source is really working closely with developers.
Would it not just be easier for you just to buy Bitcoin?
Well, sure, and I actually think the best way for an institution or high net worth individual to participate in the ecosystem is to hold Bitcoin and to be invested in the startup ecosystem.
So do both.
Do both, and hope the way that the work I do succeeds is if the companies that I invest in succeed, but if they also benefit the ecosystem as a whole and increase the stability of the field and the technology. And so if we succeed, it should make Bitcoin more robust in its own way.
And I guess you mix with a lot of other VCs who work in other kinds of funds who invest in other markets. Are you seeing more of an interest in Bitcoin now from these people?
Well, absolutely. So this is very funny. So I think we're at the stage of the ICO cycle where everyone investing in ICOs is now a Bitcoin investor. So welcome back to all of you. But sure, listen, I think that the technology is just really hard to understand, and there's most VCs still working in the field created wealth and businesses and brands based on a completely different paradigm that required them to think about the aggregation of power, of authority, and just a different sort of business model dynamic. And so to kind of relearn or rethink what it is to create value in a company when that company is built on a Bitcoin blockchain it'll take quite a bit of adjustment. And I think we're seeing people go through that now.
So in the last bull run, I'm trying to remember exactly, but Bitcoin got up to hundreds of billions of dollars in value. We could have a bull run where we move into the trillions of dollars in value. How do you think that's going to impact the market? And then would you expect a rush of investment opportunities to come from the traditional market?
So I think two things will happen is that there'll be more founders will move into the space, and also more talent will move into the space. So existing companies will have a broader pool of folks to pull from when they're hiring, and then we'll see more capital move into the space. We'll see folks being interested in getting access to venture funds that have expertise in the space, and hopefully the emergence of more sophisticated funds to deploy capital in the space. Our biggest risk, of course, is having enough smart co-investors. And when you're working in venture, it's not just a single firm that's capitalizing a company. Over the course of the company's lifetime, there'll be a dozen different firms. And so when more investors and more sophisticated investors move into the space, we're directly benefited by that.
So how do you get people up to speed then? Because sometimes I think it's quite understandable why some Silicon Valley investors went for the ICO craze, invested a bunch of money in tokens with the belief that this was something, because I think I'm not alone in being sucked into the whole thing myself.
Of course.
It takes you sometimes to kind of realize why Bitcoin is different. So how do we best educate people and get them up to speed on the difference between Bitcoin and all these other blockchains?
Yeah. Oh, so I feel like this is you're holding me accountable on this, so this is good. So I guess when you started asking the question, what I thought to myself was that I've a little bit given up on that. But I think the thing to do is to not. And so, I've spoken at a lot of different firms and with many different venture investors, and it's hard because folks don't like to, especially if you're a generalist firm and you're trying to look at many different technologies. You're never an expert on any one thing, and Bitcoin asks you to be an expert. And so I think the thing to do is that we all remain in dialogue unjudgmentally of others and continue to answer the same questions over and over again. Something that we are focusing on this year and in the going forward is making more direct connections between our developer and founder network and other VCs in the space. So we organize actually events around that so that we kind of open up the private room conversations to folks that are way outside of those private rooms but want to come in. And so we're trying to set up channels of communication so that the rising tide lifts all ships in the venture field.
Okay, so conscious of time.
Sure.
So say we're sat here in 2029, Magical Crypto Conference. You and I are doing a final chat. Where do you think Bitcoin will be?
So, well, in 2029, what I hope that we're talking about when we're sitting on stage with the final chat is the way that Bitcoin has had impact in emerging markets and with unbanked and underbanked, and that's actually one of the things I'm most excited about. Is one of the hypotheses that Stillmark has in approaching this space, which is that Bitcoin blockchain is becoming a critical infrastructure to the transmission of value in a way that opens the doors to a much broader global village marketplace, right? Because we're finally seeing people across geographies and socioeconomic statuses have the ability to participate. And that will be introduced by some of the founders in this room and others still onboarding. So let's talk about that in 2029.
See you in 10 years.
Wonderful.